Hey, it's Rob. Welcome to Everyday Investor, the hottest TV show in the world. That's right, I said it. I don't care who knows it. Remember, whenever you're offered any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what's the return on investment? 2, when do I get that return along with the money that I put in? 3, what is the minimum investment amount needed? And 4, what is the risk? What is the downside? This show is designed to help us grow our money. You see, often the challenge is we take our precious time, we go to work, we get a paycheck in order to eat. Let me say that again. We take our time, the greatest commodity that we have. We go to work, which is a blessing. It's good to work. We make money in order to provide. But imagine a life where money could make you money if you wanted. You could work a little less, spend the time with family, friends, engaging in a purpose greater than yourself perhaps. That's what this show is designed for. It's to help us all grow our money, different vehicles of investments. Super excited about today. We're talking to my good friend, Sasha Cucuz from Greybrook Capital, and we're learning how we can make money investing in land development, investing alongside some of the greatest developers in our city. Don't go anywhere. We'll be right back.
It's the tallest residential tower south of Manhattan, so it's a little over 1,000 feet high, about 90 stories when it's completed, and it's a Waldorf Astoria hotel and residence that we're doing there with our partners, PMG, Property Markets Group out of Miami.
Hey everyone, it's John Temerick with Blackjack Contracting. This week's tip is when to bring in the contractor for your project, and the answer is as soon as possible. When you're going to make that firm offer, especially in REI deal, the numbers are everything. You need to have at least an idea of what this is going to cost. Too many projects go wrong or get sidetracked when they just assume a renovation budget when they don't either have the experience or things have changed in the market. Get a consultation or at least a verbal ballpark range from your contractor as soon as possible in the process, and then if it's something before you firm up, get the contractor on site or get the drawings made. Anything to do to give you the most power to make the most educated buying decisions possible. If you have any questions, reach out to me.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey guys, Omar Khan here from Theta Trading. I want to talk to you today about crypto. It's all over the news. People are buying it left, right, and center. What exactly is it? Well, it's a virtual currency that you can use anywhere in the world. So right now, if you want to do a transaction, let's say in another part of the world, you'd have to do a wire transaction. With crypto, you can do these transactions seamlessly, and it's about to change a lot in the future with smart contracts and whatnot. However, I will say this. I have not invested in cryptocurrencies yet, and simply because if you don't understand what you are investing in and have full conviction and belief in what you're investing in, ultimately it could wind up being a terrible investment. Because if it pulls back and you're scared all of a sudden because you don't know what you bought, that's not a great spot to be in. So before you invest in cryptocurrency or any other thing, again, always go back to the basics. Understand what you're investing in and why you're investing in it. We'll see you guys next week, and we'll talk soon.
Hey, it's Rav. Welcome back to Everyday Investor. We're talking about how to make money in land development. I'm talking to my good friend, Sasha. Sasha, thank you so much for being on the show with me.
Always a pleasure to be with you, Rav.
Yes, and I think most people know, but for those that are viewing for the first time, shame on you. You should have been watching this 18 years ago. Just kidding. I'm so happy that you're here with us. But I'm very grateful, Sasha, that you and Peter and guys at Greybrook kind of even brought me alongside. I mean, I was a very active and aggressive investor, 10, 11 deals with Greybrook, and you brought me in as a bit of a business development guy, a little bit of PR, and happy to do it because it's been nothing but just great success for me and my family investing with you guys. So thank you for that. Greybrook does so much. I mean, whether it's social living, whether it's apartment buildings, whether it's land development, which we'll focus on today. We're into the health space. I'm invested in something that's dear to my heart, treatment for mental health with TMS Greybrook. We're looking at clean air with Delos. So much we're doing. I mean, Sasha, you're a husband, you're a dad. How do you keep up with doing so many things that are all successful? I mean, I want to talk to you about that a little bit. I mean, just even me speaking about it, I feel faint.
Yeah, it makes you tired. Well, listen, you've been around us long enough to know that we're only as good as our team here. And we have, close to 80 people now. And, we just have a fantastic, dedicated, talented group of people that kind of make this place work. So while I'd love to sit here and take all the credit for, all the ideas that you've just mentioned and these businesses that have become consequential, really it's just a function of the people we've managed to attract and bring around our business.
Yeah, no, it's fantastic. And tell us a little bit about, how this all started with Elias. I mean, it's yourself, Peter Politis, and then Elias Manvakis, and, talk to the viewers a little bit about him.
Yeah, so you mentioned a few of the things we do in healthcare. That's something that, is near and dear to us as well, because when our company started, it started with Elias, who was a healthcare entrepreneur. He started a business in the LASIK industry, and it was at the time, one of the largest, if not the largest, in LASIK. The company is called TLC Vision. So after Elias took that company public, he obviously stayed on as CEO and chairman for a number of years. But with any entrepreneurial endeavor that's successful, he managed to, take some capital that he had created along the way and put it into a vehicle that he used to kind of invest. And that's how Graybrook formed. At that point in time, Peter and I were young and sort of decided to come work for Elias, and that was back in 2004. And today we're partners in the business, the three of us, and have managed to kind of grow it from there. So the roots were sort of healthcare oriented, but our mandate at the beginning was really to figure out great ways to put our money to work, whether that be in healthcare or in other industries. And of course, at the time, the Greater Toronto area was really just kind of hitting its stride as a real estate development hotbed. Today we look back and we see all the cranes in the air. Back then it was much less so, but we uncovered a couple of opportunities to invest in real estate. And in our first few years, we were still very generalist in nature with our investment strategy, but we really zeroed in on the development space because that's where we felt we had the best risk reward for our capital. And we've retained investing in things like you mentioned, companies like Delos, for example, that is kind of a hybrid where it's kind of a real estate company, but it focuses on the health and wellness components of the buildings that we occupy. Greybrook TMS, which is a mental health company. As you know, we have over 150 clinics that manage, depression as well as other mental health issues. So we managed to, keep our foot into the healthcare space, but the vast majority of our interest and where we've sort of built our team and capability is in the real estate development space. Yeah,
and I want to focus on the GTA, but talk to me a little bit about what we're doing with the tallest tower that we're building right on Biscayne Ave in Miami. Correct me if I'm wrong, but the tallest tower south of Manhattan?
You are correct. It's the tallest residential tower south of Manhattan. So it's a little over 1,000 feet high. About 90 stories when it's completed. And it's a Waldorf Astoria hotel and residence that we're doing there with our partners, PMG, Property Markets Group out of Miami. And, back in 2014, we had invested very heavily and continue to invest very heavily in the Greater Toronto area. And we'll talk about some of the drivers as to why we do that. But we also felt that, there were opportunities in other markets. And one of the places that we gravitated to quite early was South Florida, because we just felt Florida as a state had a lot of growth potential. We're seeing it materialize today a lot more, but growing population, really great trends from, employment, diversification, new jobs, new opportunities. So we bought that parcel on Biscayne Avenue, as you had pointed out. And at the time, a lot of the investment in the Miami area was on the beach. People were focusing on Miami Beach. They were focusing sort of all the way up on the East Coast. We decided to make an investment in the city. of Miami. We felt that a lot of the go forward opportunity is the job growth and sort of demographic shift was happening, that Miami would grow into a really 24/7 business center. So we decided to make investments in the city of Miami, and that's gone, tremendously well for us. So as you point out, we're building that Waldorf Astoria. We have several rental buildings that are being built under a banner called Society Living, which is kind of a social living, as you mentioned, platform. And we've had a lot of success there. So it's a market that we really, really enjoy.
And no, but what's really exciting is back in 2014, I mean, the everyday investor here in the GTA could be involved in that development in Biscayne, downtown Miami. I mean, back then, I think, what were we per square foot to build?
Well, we're probably somewhere at the time. I mean, costs have gone up since, but we were somewhere in the $400 or $500 a foot range to build something. At the time, the market might have been a $1,000 or an $1,100 a square foot market from a sales perspective.
Today it's selling what per square foot?
Over $1,500 a square foot. Some higher, obviously. Some of the more premium units are in the 1,600s plus. The development's got a ton of attention south of the border in particular, with a lot of coverage, a lot of, call it critical acclaim. It's a tremendous design. PMG does just a wonderful job in kind of conceptualizing and design. So we're really excited about it.
Yeah, and again, I think most of our investment opportunities with Greybrook Capital, I mean, minimum investment $25,000 for most, and so somebody could have gotten involved with that, 7-8 years ago, purchasing or building rather at $400 or $500 a square foot, and today now selling at 1,500 plus square feet in a short, 7-8 years, and I think that's what's exciting about somebody who wants to invest passively. Not have to put on a hard hat or get on the construction boots, write a check and partner with the developers in land development, in this case, in South Florida.
Yeah, I mean, look, you were around from the early days, so you know that our philosophy at the beginning was to, take institutional grade opportunities and sort of democratize it, if you will, or give access to investors on an individual level. And that's kind of what we envisioned in building the business. And whether it was the Biscayne project or any of our projects, as you know, for that matter, what we really try to do is work with investors on a customized sort of individual basis. We're not a fund where you're putting your money into a pool of, to be determined. We do everything on a deal by deal basis, and we have professionals that will take the time to understand investors' investment objectives, understand their suitability for particular investments, and make sure it's a right fit. And then we'll help them create a portfolio of usually, 3 or 4 different projects to give you a great level of balance and diversification in the things that we do. But the beauty of it, as you said, is it's very tangible. So the exact projects that you're investing in, the exact plan for all those projects.
And for land development specifically, let's talk, come back here to the GTA. What are our kind of targeted projected returns on an annualized basis? What are we looking at?
Yeah, so we always look to, simplistically put double our money every 5 years. That's kind of our goal. As you point out, the development process has many different components to it. One of the things that we love to do is buy land, I'll call it in a raw form. Of course, that's a generalized statement. Zoning is very complicated, but we tend to buy land that is kind of prior to approval because we like to participate in the value creation that is associated with taking land and getting it to the point of full permitting and zoning where you can go ahead and build, whether it's a condo, a townhouse development, a housing development, or whatever the case may be. And oftentimes that can take some time. But again, we're creating value all throughout the process. And our objective, as I said, kind of a minute ago, is to kind of double our money every 5 years.
Okay. So in and around a 20% annualized kind of thing.
That's our target. That's our target.
And so, Sasha, here we are, 2022. middle of the winter, approaching spring. What's happening in the market? What's happening? What's going to happen? We're going to take a break here in about a minute or so, but if you can get all that in, no pressure.
Getting it in a minute is, this might be one of the most interesting times we've seen in a long time. Obviously, there's a lot going on. There's talk of inflation, interest rates, there's a whole bunch of different things. But I think the one thing I can tell you with great certainty is what brings us to the Southern Ontario market is what will continue to bring us into the Southern Ontario market is this strong set of fundamentals where we have, really an undersupply of housing. And there's a number of reasons for that, from approval processes and the time it takes, from, construction and the constraints on the industry. All this to say that there's a lack of supply for this incredible demand that we see in a prosperous and growing area that will continue to be a prosperous and growing area. So notwithstanding, there could be always complexities in the market from time to time. And right now we're in a particular time of, we'll see what the next 6 months bring, but we really feel great about the long term. And you have to remember that development is a long-term business. You're not buying something, for a year or two. You're typically investing in things that are 5 years plus in duration because you're manufacturing housing.
Yeah, no, I love that. We're in the manufacturing business, and it happens to be in housing. Sasha, thank you so much for being with me. We'll drill down on some numbers when it comes to land development. Don't go anywhere. We'll be right back.
Hey, it's Kyle from the Kyle Ford Mortgage Team. This week I want to talk about financing properties, investment properties specifically, with less than 20% down. As many people know, it's quite common to buy a primary residence with 5, 10, or 15% down. But when it comes to buying an investment properties, the industry standard is 20%. At the Kyle Ford Mortgage Team, we specialize in helping investors purchase properties that are more difficult to qualify for. Often we are able to get financing at up to 90% loan to value, which is a 10% down payment, by using private money. Now, this doesn't work for everybody, but if you're buying properties that need work, have significant upside, or have a clear exit strategy, we can help you acquire with less money down. If you have questions on how this works, don't hesitate to reach out to myself and the Kyle Ford Mortgage Team.
You've always dreamed of having rental income, but buying a rental property? Well, that's a tall order. Capitalize on the space in your home instead. Renovate and rent out that space with ease with LegalSecondSuites.com and the team at Wise Construction Group. With LegalSecondSuites.com, our talented team of BCIN designers, engineers, carpenters, and tradespeople can transform that unused space into a beautiful, legal, and safe rental unit. We're empowering the everyday homeowner to become an extraordinary landlord. Get more out of your home. Visit LegalSecondSuites.com for more information.
Hey, it's Rav. Welcome back to Everyday Investor. We're learning how we can make money investing in land development. Talking to my good friend Sasha from Greybrook Capital. Sasha, always great to learn from you. I mean, you're everywhere. I mean, we've got investors in Greybrook. I don't know how many. I want to throw out 6,000 or so investors in almost 40 different countries. And, you're just in Israel working with people there. I mean, what is it about Canada, about the GTA that makes people want to invest here?
Yeah, listen, I spend a lot of time traveling, as you know, and we have investors in many different places, the bulk of whom are also here in Canada because, I think we get a front row seat to what is kind of happening here. Look, we have a very prosperous opportunity in front of us. The country has a lot of growth opportunity. We embrace immigration for many economic reasons that it's required. And as a result of that, Canada has become a place around the world that people have looked to for opportunity. And we have a lot of, social stability. We have a great banking system. We have a diversified economy. And for those reasons and more, we're attracting all the right people. And as it relates to the GTA and Southern Ontario, more broadly speaking, just because of its kind of central location in the country, its proximity to the US, and the fact that Toronto as sort of an economic hub has continued to grow, we see a vast majority or at least a high proportion of that population growth. So all of those things, when you have a growing population, it makes housing a requirement. There's a desperate need for housing, and those are great ingredients typically when you have demand outstripping supply. And here as an industry, what we're trying to do is fulfill that demand. And that's why it makes it great from an investment perspective.
Listen, when people come to me, they say, Rav, does Graybrook have any, 1 year, 2 year deals? And I mentioned, maybe if we're building, 50 to 100 townhouses, we might have a 2 year deal. But why do you want a 2 year deal? And, it's ironic. They want to make the big buck and they want to, make it quickly. But the best dollars to be made, I've learned, is in the long-term deals, of which we'll look at. I mean, again, I feel privileged to be involved in investing with you guys in Hamilton and Scarborough and Yorkville and Markham and, Durham region, all over. But my best deal, my favorite deal, and they've all been great, is Fergus, Ontario. And that deal was, 10 years ago. I hope it's a 20-year deal. I think it might be a 15, 16, 17-year deal, but I can't even share the numbers on screen here because let's just say it's more than 10 times in 10 years. And so if Rav put in $100,000, I in essence made 100% every single year on that 100, and it's been a lot more. So I want you to teach the viewers at home that the longer term deals, sure, they're short ones and jump into those. And if you do multiple, you can kind of get some, cash flow. But the longer term deals are the best ones. So talk to me, teach the viewers how you've taught me kind of a little bit about the land development curve, as we call it.
Yeah, so this is kind of one of those things that's a lesser known part for investors because development isn't really as prevalent as, let's say, buying properties or income producing properties and things like that. So when you're involved in the development space, what we really want to do is make sure that we're creating value and creating margin, as we'd call it. Again, we're in the manufacturing business throughout the entire process. So the best way to think about it, when you think about these shorter term deals, in order for us to be able to build 100 or 150 townhomes, for example, in the period of 2 years, you have to buy land that's already fully permitted, fully zoned, and ready to go for that particular use. Somebody before you has done all the work required to get that land prepared and ready such that you could go on and build immediately, sell and build immediately. So in those shorter deals, the trade-off is they're shorter in duration, but what you're really getting to realize is the margin that's involved in the actual manufacturing of the homes. The margin in the land, as we call it, getting it from a more raw form to a completely prepared form, that's been, taken by an investor prior to us.
When you say raw, because I want to be clear, when you say raw, it's not like we're buying, perhaps grandma's swamp land. I mean, raw land means we know because of the almost 100 people that are sitting in an office downtown Toronto and they're doing their work and underwritings and surveying and so on and so forth. This raw land is pretty much ready to go.
Yeah. So let's be specific. We think of it in kind of three. I always say quadrants when I talk about this, and I realize quadrants is 4, but we'll call them 3 quadrants because I don't have any better way to explain it. The first one is something we call land entitlement. Okay. So again, planning anywhere you're doing it, particularly here in Southern Ontario, has a lot of nuance to it and a lot of complexities. And what entitlement means is kind of what you've described. Something that's a swamp, as an example, is usually not designated for a residential use or a commercial use or anything otherwise. So if you're buying things that are unentitled in its truest form, raw, then the risk that you're running is that you're trying to get the rules and the planning parameters to change such that somebody says, you know what, that should no longer be a swamp. It should be a residential community. That is a oftentimes binary process. And also, it happens in very set increments. Typically, municipalities look at their official plans every 10 years. So if you miss the window, you're kind of waiting with swampland for another 10 years. So that's not when we say raw, we're not talking about buying things that are outside of those parameters. What we're talking about is things that have already been designated as part of an official plan or that are about to be designated within an official plan. There's a much more straightforward pathway to get it from that stage to fully approved. And we call that land development, more or less, right? And that's kind of that middle quadrant. So on your drawing, if you think of that left side, at least my left, you're looking at things that are raw and unentitled. That is not where we're playing, although that can be exceptionally lucrative, right? A swamp might be worth a penny, a residential property might be worth $1, but there's a lot of risk there. Where we feel a lot more comfortable is buying something that's worth $1 because it has the designation and the capability of becoming approved for whether it's a condo, whether it's a housing community or whatever the case may be. But there's a lot of work and a lot of time and a lot of complexity to move that from just call it a raw but entitled piece of land to something that has fully thought through the dynamic of a neighborhood, for example, and where do the schools go, where do the parks go, what type of housing are we producing there. That process can oftentimes take many years. But the benefit, of course, is that you're adding a lot of value because that land, when it's approved for a lot of builders who are set up to go ahead and build, they're looking to buy land that's closer to approval rather than further from approval. So there's an opportunity for investors like us to come in at an earlier stage, not take that entitlement risk, but take it through a land development process and obviously, make successful investments as a result of that.
So how long to get it ready to build? I just put approved there, but let's say to get ready to construct, how long does this take? About 4 years, 5 years, generally speaking?
Yeah, it can take anywhere from 4 to 5 years. That's kind of the 4 to 6 year time frame. That's typically the process of getting it to that approved stage. For example, we acquired a property in Lindsay, Ontario, just outside of Peterborough, not too long ago. We have about a 5-year window from its current stage where it's in the official plan, but still raw, as I define it, to get it to the point of draft plan approved. And then, of course, you can start marketing and subsequently building homes thereafter. So that's about the time frame.
Yeah, no, and I'm really happy that we're talking about this because most people, they want to get in here at the build and then at sales, they make a lot of money. But what I've heard you tell me at times is actually, Rav, there's even more money to be made from raw land to being approved than it is from building to sales. Now, you're still making money both ways, but there's a lot of money being made right here. So why not enjoy both?
Yeah, for sure. If you can have access, and that's one thing that Graybrook can provide with our partners is access to that type of opportunity because it isn't a simple game. Often, I get calls even from investors of ours who say, I heard about this property just outside of Durham, and I heard that, it's going to be included in the official plan. Generally speaking, there's a lot of work that needs to be done, obviously, to be able to determine which land is going to, make it to that point and which isn't. And I think that one thing that, we're always happy to do is if people have that time horizon, and what's particularly great about investing with us is you can use your registered plans. So for a lot of people, when they're looking at these longer term deals and they're using registered funds that they may not be accessing anyway for a period of 10, 15, 20 years in some cases, there's a real opportunity to grow your wealth considerably by investing in opportunities where you're participating in that land development as well.
Sasha, just before this, I got on social media, and one of the questions were, what do I wish we could change about the show? And my answer was, I wish it was a 1-hour show instead of 30 minutes. Sasha, this has been great. Thank you so much. Just giving us a bit of an overview of, how to make money in land development and what a great company Greybrook Capital is. So thanks so much for being on the show with me.
You're welcome. I'm happy to come back whenever you want.
Yes, soon, please. And thank you guys for watching. Without you, we would not have a show. Make sure you tune in next week. Same place, same time. Honey, love you. I'll be home soon. Bye, everyone.